Welcome to Retired Hustler. This is week 14. I'm making weekly videos of my option trades. My goal is $100,000 profit in 12 months. In my videos, I'm being very transparent with my all trades of the previous week and next week's together with their losses and gains. And I'm also sharing my entry points and potential exit points together with my thought process behind. Of course, I'm not a financial advisor. I'm just recording my journey for my goal. So please do your own due diligence before investing any money to the stock market. As you can see, this week I closed 14 trades. And out of 14 trades, I made almost $8,000 profit. And that made me 28,000 profit in November. So we have another week in November. Let's see, am I going to pass the 30,000 mark or not? But let's start with the closed trades. As I mentioned in previous week videos, by the way, this is my own website. I built it. I'm keep adding new menus. Like right now, I'm working on these two, Leap Simulator and Wheel Scanner. It is showing, for example, potential opportunities for wheel strategy, and Leap Simulator helps me to decide my exit points and simulate my profits for the leap trades. Right now I'm finalizing a video on this platform itself. So I'm walking through each and every tab here, what it does and how you can access it. I'm really excited about it. So I will post it in a few days and you will have more details. So let's continue with our trades. Here, this week's trades, 17 November to 23 November. And I have here some requires attention trades, which means this current price is below the strike price, already past the strike price, or getting close to that strike price. And I will focus on these ones. Probably I can roll a few of them or close a few of them. So let's check this week's trades. We are going to click here. And as you can see, I had 30 trades this week and I closed 14 trades with a 7,000 profit. I close my video so you can see more details here. So here there is 14 trades, closed ones with a 7,000, almost 8,000 profit. So we had a loss here for $800. So maybe let's start with that. I will click here and open the graphic. So I opened this trade on 15 October and closed it 18 November. And it was expiring in a few days. My strike prices was 44, 40, 435 and 440. It was a put credit spread trade. So 15 October was just around here in this big drop. It went below 200-day moving average, and previous moving cycle was pretty much in the Bollinger Bands, and on this day it went below 30 RS stochastic indicator, and it went right here, touched to the 20 zone, 30 zone in the RSI. So I entered trade here and I put my strike price here 440, 435, and but it went so much down, so I had to exit with a loss. So that was my 800 loss. I think I could make it better, maybe exit around here, but I think I exit. Oh yeah, this 3 days drop was crazy. Whole market was going down. So I couldn't catch it actually. So let's see the other trades. I will sort it here. I had more credit spreads here. Mostly I opened them 13 November. I think on 13 November we had a huge drop in the market. Let's check a few of them. Celestica, I entered trade 13 and exit all of them on 20. And 13 October was here exactly. There was a huge red day in the market. It went down and touched to the 50-day moving average. And then I opened my credit spread here with a strike price 225. Sorry, 225. It was right around here on the 100-day moving average. I set up my credit spreads right here, and I think on 20, yeah, here it made a big jump, and I exit around here with a profit of $115. My entry price was 135 and exit is 75. And another put credit spreads in Tesla and Broadcom. So let's see the Tesla. I think on 13 there was a big drop in QQQ. So I will just check that 13-day. Yeah, it was right here. QQQ dropped 2%. And on that day I opened a few trades. So Tesla was here 13. It was this day. It went below the Bollinger Band and below the 100-day 50-day moving average. So I enter my trade here and exit on 20 when it made this jump. So I profit from that $185. And Broadcom, let's check that one. Very similar. 13 was this one. It touched to lower Bollinger Band and I exit on 20 in this up movement. There's another one in Walmart. I enter trade 31st of October and exit also on 20th. I will go Walmart from here. So I entered trade 31st October right here. It touched to the 100-day moving average and went down from all-time highs to all the way to the lower band, and I exit on 20 on this big jump. On 20 October, there was a big up moment in QQQ and SPY. So yeah, SPY here also. In the same day, it went down, but I used that day to take profits from my credit spreads. As you can see, mostly I took 50% profit. My open price was $1 and I see 0.5 and I exit 0.92 and I exit 45, 135, exit 0.75. That was my credit spreads overall. I had here a put option. So I bought this put option actually. Let me show you. I mentioned about this trade in my previous weeks as well. So I opened the trade right around here when it went to the all-time highs, 24 October, and I exit 17 November. 24 October was right around here. It was touching upper band, and based on the previous stock movement, I guess there will be some point down movement, and stochastic indicator was right around here in 90. As you can see, whenever it touched to the 90 levels, it went down, touched 90, it went down, and it was same for RSI, and MACD was also showing overbought. So it went up a little bit more, but eventually in these 3 days it had a big drop, and I think I exit on this 17 November, yeah, with almost 90% profit actually, yeah, because I bought this put option for paying $825, and my strike price was just on the money, which is around 45 delta. So any down movement, one stock price movement to the down, get profit $45 based on your delta. I exit around like 20 point down from my strike price, the entry price. So that's why I was able to get $800 profit, and that made a 98% ROI, which is crazy. As I mentioned in my previous videos, I'm doing wheel strategy in Amazon. So I'm selling cash secret puts and covered calls. When I get assigned in covered calls, I'm selling cash secret puts. So I had a few puts assigned 0, and it went down so much. Actually, I rolled this one. So I rolled this one because stock price went so much down in Amazon. Amazon went to 220s, 230s. So these two expire worthless. And I rolled this one with a 0 credit. I rolled to 230 for next month. So I will be following this one, but I got the full credit. I'm also doing poor man's covered call in S&P Global. So I have 4 leaps option in S&P Global, and it went down so much after their earning. Let me show you that. So it went down like 10, 15% here, and I enter here some leaps options, and it start going sideways. So right now I'm selling covered calls short term, like 30 days, 40 days. So I'm getting some money while waiting the stock bounce back. So from 4 calls, I profit around 700, and my strike price was 530 right here, and stock went just sideways. I'm planning to open another one around 540, 535 levels, like 4 more covered calls. So I think it won't be that fast to go up. So that's why I can earn some more money from covered calls, which is called poor man's covered call. Okay, lastly, I had some long calls and leaps options. Actually, that was the highest profit trades of the week. And last week, as I mentioned, I had a Netflix long call. Before split, I bought, I think, 5 long call option in Netflix, and I profit around like $15,000. And I put that profit into NVIDIA long calls. So I think I bought 10 long calls, and let me show you the graph. NVIDIA went so much down together with all QQQ. So I think I opened my trades around 13, 14, and 18 November. I think on this drop, when I see it went down from the 50-day moving average and getting close to the 100-day moving average, I think I bought little here in this drop, and it went more, and I bought there. And I think I bought also in this, yeah, 18 here. So in total, I bought 10 long calls for the expiration of, I think, January, February, and March. And my strike prices was around 145 and 150, which is right around here below 200-day moving average. So on 19 November, there was an earning call. Actually, that was my play while buying these long call options here. Even though there were a risk after earning, it can go down and up. You can't know that. But eventually, I believe NVIDIA's feature so much. It is one of the best stocks in the stock market. And I had 3-4 months for waiting to bounce back. So, and it was one day later, there was a earning call. So I entered these trades. That was my thought process. And on the day of the earning call, it went 5-6% up, and I sold all my long call options right there. And all of them was around like 80 delta. So that's why they brought quite profit, almost 6,000 came from that 3 trades. And I also had some Walmart leaps options after earning call. I think I bought some leaps options for Walmart. It was 31st of October. Yeah, it was right here. It touched to the 100-day moving average. And yeah, Walmart stock kinda has that 100-day moving average as a strong support level. So whenever it is touch, it's bounce back, touch, it's bounce back. So I enter right here, and I think I bought the leaps for, yeah, 2027. So when it made this huge jump here on 20 or 21, or I exit on 18 November actually. Yeah, I think I exit here. Yeah, I exit on this up, and I think I profit around $300. I could wait a little longer, but last week the market was horrible, so I thought it will go down whole market. So when I see like $300 profit, so I said, okay, I will just take it and keep moving. So that was my overall 14 closed tickets and my thought process. So let me show you some of my open trades. So with that NVIDIA trades and profits, I bought more long call options. So I bought 3 NVIDIA and 2 Amazon. They went so much down last week, and I think I opened those trades on 21. Yeah, on 21 whole stock market QQQ. Look at here on 21, it went even down from the 100-day moving average for QQQ out of the lower band. So Amazon and Nvidia, all of stocks were just here. So I took right in this deep some long call options for 6 months in the future expiration. Yeah, it is like more than, I think, like 10 months. Yeah, both of them is August 2026. And for Amazon, I choose 180 strike price right here, well below the current price. And for Nvidia is same. August 145. So I think I will buy more. I had cash. This I was kind of piling some cash for these kind of opportunities, and I will buy more. I think if Amazon and Nvidia stays here, those are my favorite stocks actually, and both of them is below 100-day moving average, and RSI is around 40s for both of them. For Amazon, it is same. So there, 40 is kind of their support level. So I think I will buy more long calls on this one. I'm also following Meta, so I might get some Meta long calls, but it's quite expensive. I think I will, instead of like buying one Meta, I can buy just 2 or 3 long calls in Nvidia. So that's my strategy for upcoming week. I will see if stock market continue going down. I will keep buying more long calls and I will open more credit spreads. I open lots of credit spreads, especially put credit spreads in this down market. So all quality stocks like SPY, QQQ, Microsoft, Costco, MasterCard, Visa, they went so much down. Like I couldn't just resist but buying some put credit spreads in the future. So look at here, like MasterCard, you can't see MasterCard much like below 200-day moving average. Like it's very rare. In the tariffs crease, it went down from 200-day moving average. So I bought some MasterCard for three months expiration, and same with Visa. Visa went down a lot, and I open I think for strike price here. And Microsoft again went so much down, it touches to 200-day moving average. I think I open all of them in same day. Yeah, 21 November. It was right here on this Friday. And QQQ was same on 21st November. It went down 100-day moving average. I opened some in Palantir again. I just want to use this drop with some put credit spreads, and my expirations are well in the future, March and February. And Costco and Meili was similar setups. So Costco went down from Bollinger Band on 21st. And I also opened some in Amazon and some more in Palantir. So I really want to use this down week with the put credit spreads. So let's see, I don't want to put my expiration dates 40 days, which I usually choose for the 45 days expiration for my put credit spreads. But considering this market, I want to be more in the future, more in the safe side. My premiums will be lower. Probably my profits will be lower since the expiration date is in 3 months, but I just want to be in the safe side. I just want to write my long calls and buy more long calls, and I will be waiting for the bounce back for my credit spreads. That was my strategy in this down week, and in the following week I will be following these stocks. If they keep continue going down, I think probably I will buy more long calls and I will sell more put credit spreads. So that was all from this week's, and hope you enjoyed the video. Please drop me a comment if you have any feedbacks about my videos. Also, please consider subscribing to my channel if you are wondering my 100K journey. Thank you for watching and see you next week.